Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get some. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody, and welcome to the CPI to end all CPIs. Actually, no, I don't. So here's the thing. I think this number is going to come in line. But that's going to be probably really good for the equity market at the very least here. And the US CPI, core CPI, month over month estimate, consensus estimate, spot 4. That's what I think it's going to come in at, spot 4. So let's just come over to the charts, see what they kind of been doing here. Okay, we had a pretty good run up in the morning in ZN, but then it kind of came back and I just got sliced and diced. Very unhappy about that. But in the end, we did move higher, which I was kind of preferring long, but that was terrible trading by me yesterday. And then in ES, they touched new lows again, but we're looking pretty good here this morning. Oil demand, they came below 100, but they bounced back above that. Natural gas bouncing, gold and silver bouncing, and copper kind of going sideways here still. And what about our cryptocurrencies and the dollar? Well, the cryptocurrencies kind of briefly touched 3,000 again, but they have not yet succumbed. Still seeing some pressure in stable coins out there. The dollar is still hovering around $103.5. So that's where we're at. We got about 4 minutes here. How you guys doing? I think that the market is totally just really on edge right now, and there is probably more eyes on this CPI report than, there's been some CPI reports where we were like, wow, this is a big deal, right? But now that we're at the bottom of a pretty ugly downturn in the markets, more than 10%, and part of it because of Federal Reserve actions. Yeah, there's going to be a lot of eyes on this report. What do we got going here? That's interesting. This guy hasn't found a custom range one. Is the custom range? There's this guy in Discord, and he's looking for a volume profile, order flow volume profile. Let's see here. Properties here. Delta volume profile type tick price. All right, we've got about a minute left here. They are pulling early. Oh, they are pulling early. Whoever that one lot is out there in the 10-year, you are crazy. You are crazy. I feel like buying into him just for the hell of it, even though I do think that the number is going to be in line. I guess I could sell into this guy too. Either of those would probably be fine to take if we were going to take a bet on the news, but clearly the person, okay, he canceled his. He was like, no, I don't think so. Oh, I didn't have my news clock going here. There we go. Okay. So again, core CPI is the number that we care about. Spot 4, looking for a reading of spot 4. I am hands off. Unless I have to puke this, I guess. Puke my long-term one. Okay. That's a move down. 0 spot 3. Okay, so CPI month over month was spot 3 versus the expected spot 2, and the core CPI month over month was spot 6 versus spot 4. So that is higher than expected. That was not significantly higher than expected. Spot 6 was the JP Morgan number. So I don't think that this is actually going to be the end of the world. It's going to be bad. It's going to move interest rates up a bit here for sure. I mean, it is moving interest rates up quite a bit here, but it's not a blowout number per se. But this market is going to be very unhappy. Like I was worried about a number that would be like above spot 6. That could be like just apocalyptic. This is just going to be like really ugly, I guess. Yeah, they just reversed the whole day. It was not, but I think that the when it moved at first, I was, oh wow, okay, wait, hold up, that is crazy. I don't know if you actually want to trade this spot. Are you kidding me? Somebody taking 8K there at 118.13? I don't think that that's a very smart trade. What are they thinking? If I don't think it's a very smart trade, but somebody's willing to offer out 20,000, holy shit. Offer out 20,000 contracts. They must be really, really confident, and I must be really, really stupid, right? I don't think you trade against that. Holy crap. I mean, those are some of the biggest offers out there, but I don't know. The market could do dumb things here, right? Yeah, they are. This is looking pretty bad. Like I said, so again, I just want to reiterate what I said at the beginning. Spot 4 was the consensus estimate, but there was estimates from spot 3 to spot 6. 0.6 was JP Morgan's estimate, and they were on the higher side. So it coming out on the higher side of the estimates, I'm not sure that is a just sell it no matter what price sort of a thing. You know what I mean? I think that's pretty bad. I think that the market takes a move down, but I don't think it's a disaster. And I don't think that it's worth putting out 8K lots out there. In fact, I think that they could come all the way back up to VWAP here. Micros, nobody's trading the micros. Good grief. I'm surprised. Okay, so let's let them sort that out. I'm gonna come in here and try and read the report, okay? For CPI latest release. Should I read it in a thundering voice? The consumer price index for all urban consumers increased about 3% in April on a seasonally adjusted basis after rising 1.2% in March. The U.S. Bureau of Labor Statistics reported today. Over the last 12 months, all of the items index increased 8.3% before seasonal adjustment. Increases in the indexes for shelter, food, airline fares, and new vehicles were the largest contributors to the seasonally adjusted all items increase. The food index rose 0.9% over the month as the food at home index rose 1%. The energy index declined in April after rising in recent months. The index for gasoline fell 6.1% over month, offsetting increases in indexes for natural gas and electricity. The index for all items, less food and energy, rose about 6% in April, following a 0.3% advance in March. So that's not necessarily good. Okay, so food did moderate, which is good. Food was 0.3. Energy was 0.6, which we kind of would have to expect. And shelter was 0.5 again, in line with what it was last month. Transportation up high, we would expect that. Medical care 0.5. Let's see here. Services, less energies, it's about 7. Medical care commodities was 0.1. Used cars and trucks came down. Okay, so yeah, I'm glad I closed my lung. Yeah. You thought about holding? No way. No way. Well, this is why I had really reduced my risk, right? Now in this situation, I think that I still want to be net long on my CTA, but I don't know. Well, I could maybe buy on into this guy who man, that is a monster. So this is interesting, but I don't know if this is actually enough to push. So I was thinking, here's the thing. I know that this downturn looks bad for me to be saying, well, it actually doesn't seem that bad. Probably sounds a little bit crazy. But I was thinking like, oh man, if this CPI report comes out and it's really hot, if it was like a 0.8, I really thought like a 0.8 was possible, but I guess I was like, I wasn't going to be placing bets on it or anything. Um, uh, I thought, oh, 0.8, the S&P 500 is going to 3,500, right? Now, with this one, like it's down, but I'm still kind of wondering if they will actually breach yesterday's low or not. I think that they've got a pretty good chance of it once the S&P 500 starts, but I don't think that it will happen before then. Now, on the other side here in the treasuries, I don't think you want to fade this. No, I don't think you want to fade this. But I don't think that this number moves the needle in terms of Fed action. Like, I don't think that number is oh yeah, now we've got to do a 75 basis point hike. I don't think that happens. Okay, so we do have some Fed speakers today though, don't we? I don't have them listed though. I don't have, maybe over here. Fed's Bostic speaks at noon Eastern time. There's a US 10-year note auction today. Oh. So that's why you're seeing that big 8K up there. What they're saying is I need to hedge and I need to be short below this price. So that makes sense to me. So we could potentially trade that as, oh man. So it's coming back here in the treasury a little bit. The micros aren't coming back at all. And look, nobody's putting offers out. Nobody's putting offers out. Oh man. That's pretty wild. That's super strong buying in the London session had me full. I really thought someone knew more about the CPI number and we would have a long trend day. Nah. You know, I definitely think that there are situations where the market seems to know something before the news is released or whatever, but that's kind of a crapshoot. Whether they actually do or not is incredibly difficult to decipher because the reality is the market is not very informationally efficient. The market is not very informationally efficient, and so there's going to be people that think they know something and the market will react to it and they don't know, and there's going to be situations where people do know something and it doesn't get reflected in the market. But I do think so like the thing. Oh, okay, that's interesting. The big bid there. So when I look at this, like, here's the bigger picture though, is that even though it was just at the higher end of the estimates, okay, so not a disaster CPI, but still pretty bad. But how does the public read that, right? And I don't think that anybody wants to buy the S&P 500 off of that number, right? So here's a situation where the market is likely to overextend over what the news actually is, right? Like, I think you can pretty safely just I don't know about these prices. I was saying I don't know if they'll be able to make it to yesterday's low before the open, but now it's looking like a really good probability that they will. I can't remember the last time the ES dropped 80 handles in 10 minutes. I don't know. I've never. Maybe you're right. Well, this could be an extremely high range day in the S&P 500, but over here in the treasuries, it's not actually that bad yet. Like we're not even close to as high as we were. What was it? Monday? Was it Monday? I think when we opened up and we were like in the 3.2 range or something like that. Yeah. So now that could mean that they've got way more to go. By the way, there was like a big order where what didn't check to see where that was. It kind of flashed a little bit too quickly. Okay, so at 10.5, they flashed a 7,500 lot. That may have been profit taking from the big guy though. I don't know. And it doesn't look like they got filled or anything like that. They kind of put it on and then it disappeared. Yeah. News Squawk tweets 2 consecutive months of year-over-year inflation cooling, but Fed speakers will likely continue to say they want more evidence before normalization slows. Okay, so I'm going to tweet about this. CPI came in end of estimates at 0.6. Not a disaster, but market will sell hard anyways. How do I say this? Not a disaster, but market will sell hard anyways. Perfect instance where market is likely to overreact to the economic number. But I don't think this makes 0.75 BP. But I don't think this puts 75 basis point hikes on the table. Then CPI, ZNF. Okay. But I guess the thing here with this for us, well, there you go. There's that big order is still up at 16.5. But for us, this means that we could get trade both ways, and we should if you're going short, and I think that you do want to go short the treasury here, you've got to be really cautious about these holes forming above us and sucking us back up, because there is a reason for people to be like, oh, it's not so bad. And another thing, here's another thing that is, I think, could make this even more confusing for us. Not to inject any more uncertainty into our analysis, but the market is already so ridiculously short in the S&P 500 that you know, and a lot of risk was off the table until this CPI number. I wouldn't be surprised to see this be like a short-term low event sort of a thing. Like we've moved down there. We haven't breached the lows. I don't know if we breached the lows before the open or not, but then maybe on the open they make another dive, right? Probably on the open they'll make another push lower, but then that might be it. Because like at that point, who else is there to go short? I don't know. I think we've got to. I'm just kind of because I can think of many times where we had a number like this, and I really thought like, okay, like this is it. I can just go short anywhere I want on this, and I can just hold it, and it might come back against me really far, but because of the volatility. But in the end, we know that this is going to go lower, and I'm just trying. I don't think that this is that situation. I think this is a situation where, if I take a trade, I don't know if I'll take a trade today, to be honest with you either. This is a little bit too volatile for me. But I think this is a situation where you still want to pick your spots. You still want to be cautious. You know, in this situation, if I were to take a trade, I think it would be sell 18. I think that if they fill that, there will be a little bit of a spike. But then after that goes, fill that, and then try and catch back this range, like make it as it comes back to 13, for instance. Okay, so, oh, you know what, Kevin? I think that we have had candles that were bigger. Let's go and do the math. Not the math, the research. The research. So we'll do ES, and we'll do 30-minute bars. Okay, actually, no, we'll do 10-minute bars. Let's do 10-minute bars over the last like 2,000 days. No tick replay or anything. Okay. There we go. And then I'm going to add on here my range tick indicator. And I'm going to put on the, now this stats right here. Range histogram. Okay. So 80 times 4 is going to be 320, right? Oh, you're right. It is. Oh, no. Okay, so 274. 274. And apparently there actually are a few that are right about in that area. So one of those has got to be just this, but I think that the time frame that I just added includes COVID. And so those bars are probably from around COVID, right? But anything over 160 is like, whoo, you're like on the edge of the tail kind of territory, right? And this is kind of when I look at things, when I try and look at things from a statistical perspective, this is the thing that I find like really screws up a lot of strategies, is that like everybody says, oh, okay, I think the range is going to be less than this. It's going to be less than 50 ticks, let's say. So I have a 50 tick stop, and then I should be able to make money in all of these ones. But then if you're on the wrong side of any of these, you lose so much that it's not worth it. And you have to be able to avoid the losses on these, especially these. So that means, number one, if you're going to do a scalping strategy like that, you cannot be in during moves of this nature, right? So then when I go and I do a back test, it's like, okay, so we kind of have to avoid that time period then, don't we? Either avoid that time period where the news comes out altogether, or you have to build into the strategy when there's news or not, right? So then that really changes your backtest results too. It's interesting. Like it's so easy to go in and test certain kind of like technical analysis theories, but then it's so hard to test like how your own trading will actually translate. Because even if you develop an algorithm that's like really, really well suited, matches live market, matches the backtest really well and things like that, there's still going to be things that you do that change it. Okay, there's the treasuries moving a little bit lower. They did not get to that big order, did they? By the way, yield curve flattening significantly. Eh. I don't know. Does a long here make sense? On the break, maybe? Hmm. It's yeah, it's pushing, but it's not like that was pretty good. The Japanese yen is getting creamed right now, so I think that's some of what you. But do you see? Like, I'm not seeing like stop orders per se, so much as I am like market makers just not wanting to put bids out. Actually, of the market makers that took those last 3 ticks, it looks like they're actually going to make money on it. There's quite a bit of diffusion through all of this. How about Bitcoin? I haven't looked at that. Oh, Bitcoin. Okay, so Bitcoin is below 3,000. They took the hit like everything else. Is there anything that's actually up other than yields? I guess copper is up on this session. Copper's up on this session? Yeah, I mean they sold, but they're still positive on the session. And oil's taking a hit too. Whew. Whew. But when I'm looking here on like relative volume basis, Bitcoin is getting hit the hardest. Bitcoin and I guess the 10-year, there's lots of activity in the 10-year, relatively speaking. You know what? In the 10-year, I'm not going to say that this amount of volume is like necessarily crazy, but you're definitely like for this time and everything else is very high. There's the street tweets breaking Bitcoin falls below 30,000. Woo. Okay. Well, that one makes me want to buy 07.5 right there. If they're willing to put a spread that tight on it all of a sudden. Let's just pretend that I took it. No, not quite what you want. Live monitor on Twitter says peak inflation my ass, but it is actually still peak inflation. Mm. Yeah, what did I say about yesterday's low? I was saying I don't know if they'll do it before the open, but they quickly answered that question very quickly, didn't they? They quickly answered that question very quickly. Oh, one of the things, because I mean, you've seen it before, right, Kevin? Like, remember the June 2020 jobs report, right? And that number came out, and we just bought it, and then like it went, but then like they chilled out after about 15 minutes. That's actually this. So I guess this is maybe a little bit more furious, but like they chilled out, and the S&P 500 didn't make the real move until it actually opened. So that's why I was kind of wondering if, you know, how much volume there actually is going to be trading it morning. I think in this situation, there's a lot more eyes on it. So, but I'm still kind of more interested. I mean, the whole point of that was more of the, okay, how does this play out on the open? So one situation is they sell on the open, and it just ends up being a trend down day. I mean, that is a possibility, but I'm kind of thinking that there will be a sell in the morning, and then sometime maybe in the first hour they will set a low, and there will be covering, and the short covering might actually be a lot stronger than people expect. So that's kind of the sort of thing that I'm trying to prepare you guys for. And meanwhile, over here in the 10-year, I think that we buy yields, but I don't know where. Like from that perspective, 3.08 is as good a price as any. It's as good a price as any, but I don't actually know where you want it. I don't think I want to get involved. I'm a little scared. Should I not be scared? Interesting. That was a push to new lows there, but the 30-year was not with them. I'm gonna zoom in on these guys here. This is why I got all three charts up. Oh, the downtrend in the 5-year is much more consistent, that's for sure. Now look at that. Okay, so I got to remind myself, I'm going to see like really slippery moves and I don't want to try and join in on them. And I probably don't actually want to do it in those spots. Yep. And sure enough, there's the 5-year reverses there. Okay. Now I am noticing oil starting to moderate and maybe push towards the highs. Okay. So this is exactly what I'm talking about, right? They came back there quite a bit. Now all of a sudden I'm thinking about that large order that we had seen at 118.16. I bet you that it's still up there. But that would be a big move to get back up there. I don't think that's going to happen. You think that could happen? It could happen, but do you think it's going to happen? We are definitely seeing things relax a little bit, right? Like here in just the last 5 minutes, the pace of the tape has chilled considerably. Senator Rick Scott on CPI inflation report. Joe Biden has tanked the economy for 15 months in a row. He must resign. This is coming back quite a bit. See, this is my problem. I wouldn't mind going long yield, but I don't think I'm willing to sit through $40 drawbacks. I don't see what would give me confidence that like I can take it at 3.06 and that it won't go back to 3. Larry Cermak, I don't know who that is or why I'm following them, but this has been probably the craziest few days in crypto for me. Right after the COVID crash, absolute insanity happening. In the next few weeks, we will start finding out about the actual consequences of these last few days. Yeah. So here's the thing. In the markets here, um, obviously the knee jerk reaction in the market is going to be lower because the number was high, and um, all of the media that you're going to see today is going to be talking about how terrible CPI is and how terrible the economy is. But I don't think that we should make a serious conclusion about the midterm trajectory of the economy for a day or two. You let them trade it out, see where we end the week at. If Because I don't think that number means 50 basis point hikes, right? I don't think that number means 50 basis point hikes. So, you know, this may come and turn into a sort of thing where like the market was already too negative, right? But on the Bitcoin side, the thing that I continue to find interesting about Bitcoin is how closely correlated it is with the Nasdaq. It's too closely correlated with the Nasdaq, in my opinion. I think that at some point they should decouple, and I am concerned about the pressure in Bitcoin causing things to crack, like it has with Terra. And there's plenty of other things that could break. Okay, there's the whole microstar thing. And now he's been making a big to do. Like, okay, so here's this thing. There's two things I want to talk about in the cryptocurrency space. Okay, I really want to take a trade. I'm really sitting here like 3.05. I think I should take it. I even armed my account, but just that pullback right there, that was almost $50 pullback. I cannot risk my account in that kind of action, even if I feel confident that rates will be higher. So I'm going to distract myself by talking about cryptocurrencies. Okay. So, what is his name? Why am I having a hard time here? MicroStrategy. Michael Saylor. Okay, yes, Saylor. So Saylor came out a couple of days ago and he has said, well, we don't get like quote unquote margin called until Bitcoin is at like $20,000, which was kind of a silly thing to say. Like, you don't talk about where you're screwed at, because then somebody will come and try and get it to that price, right? We had a big rout yesterday, right? And so Michael Saylor was out on Twitter yesterday saying, no, because we can add more Bitcoin. We can put up more Bitcoin as collateral in our loan, and then we're not margin called until like 3,000 or something like that, right? And when I saw that tweet, you know what I was thinking? You scared. Because here's the thing. The stock price cannot handle that. The stock, the company will break before they get the quote unquote margin call, right? Probably. They're already, remember, they were up above 1,000 at one point. They're back down to 250. Last year, remember last year when I was trying to short them and everything? I should have just put a much I should have gotten a strike price like a year out. Would have made so much money off of that. Here they come moving back up. Oh, actually, okay, they're still at 110. I need to reset my DOM. Anyways, I think he's worried. And they should be, because their stock's getting pummeled. The other thing that we got going on is there's this whole Luna Terra. Terra is like a stable coin that is based on like algorithmic trading and not being based on being backed by dollars or anything. This is a really weird scheme that's algorithmically constructed. And a couple of quants that are like big quants in the industry did independent analysis of this and basically showed how mathematically what they were trying to do was not going to work and was destined to fail. So of course, it breaks, and their peg got destroyed, and they used all of their reserves to try and maintain this Terra peg, right? So another big raid like that, and Terra is finished. I don't know what it does today's CPI and the move in the S&P 500 be the thing that pushes that over the edge, possibly. But then on social media, there was all of this rumor that it was Citadel that had done it, and I just thought that that's the dumbest thing I've ever heard. That now they're claiming that they'd used 100,000 Bitcoin to do this, so that's like $3 billion. Which I know, when I first saw it, I thought, oh, only $100,000 to ruin your stablecoin, but I think that they meant 100,000 Bitcoin in this theory. I don't think that there's like zero evidence that this is happening. Like, one guy on Twitter said, maybe it's Citadel. Citadel could be doing it, and now they're running with it. It's the biggest load of bullcrap I've ever heard. First of all, Citadel doesn't work that way. They're a market maker primarily, and they're not gonna worry themselves with quote unquote Terra, right? That's interesting. Fairly large order at 12 app. So I think that the whole thing is just like, these guys can't handle that the thing that they put their trust in is falling apart, right? And they're trying to find somebody to blame, so it's Citadel is the person to blame. But sometimes what do they say, like, think about who else you're in the trade with. And if I'm long Terra and I'm looking at the other people in Terra, all thinking that, oh, it's Citadel is making this happen, I don't feel very comfortable being in that trade, I don't feel very comfortable. Like, just the fact that they can even do a raid like that, doesn't that kind of mean that, like, the whole idea of the stablecoin is a bad one? Of that particular stablecoin, at least? Kinda. Don't you think? Don't you think? I don't know. Normally that would get you guys all animated, but I don't think any of you guys are in Terra. Nope. Somebody asked me in Discord if I had traded that. Okay. Well, the 10-year has been here at the 118.11 half area now for about 10 minutes. Bloomberg Crypto retweets Beth Ponsot. Quan waves away the accusations of Terra being a Ponzi scheme careening towards disaster. For anyone wondering what's going on with Luna/UST, may I suggest our big take from April? Inside Do Kwan's $10 billion plan to prop up Terra. Man, $10 billion. Yep, disappointing core, but details are better than the spot 6% print. I agree. Spot 6 is not actually. I think that people are reading the headline number, they don't have enough nuance, and they're reading that headline number and saying this is the doomsday scenario. It's not. I think that it would have had to have been above spot 6 to be the doomsday scenario. If it was like spot 8, then we would have been like, okay. We're definitely not getting past peak inflation, and this could get worse, right? China poses acute threat to Taiwan, U.S. Intel chief says, okay. It's just an acute threat. They only talk about taking it over like every other day. It's an acute threat. Why are our viewers so long? Yeah, well, we're actually still tend to get into the 20 to 24 viewer range eventually. We usually don't get there until after the S&P 500 goes there. I think that one of the things that goes on is I don't expect people to come in and watch the live stream for the rest of their lives, to be honest with you. I mean, I know that's kind of like a dumb thing for me to, I mean, I would love for everybody to come and watch it forever. But I think that, when I look at what am I really trying to do here with the live stream, like what's the point of it? There's the community aspect of it, and there's the learning aspect, the educational aspect of it, right? From the educational aspect of it, I think that what we do here is we're taking people that don't know very much about trading at all, or they think they know trading, but they really don't, because they've only focused on the technical analysis side of things, right? So then they come here and they find out the true nature of the market and the economics of things and how the interest rates affect things, right? I think that after you've been in here and you hear us talk about it for a couple of months or whatever the deal is, you probably get tired of it after a while. I think that there's a certain point at which your learning becomes enough that you only want to come in and check when you know that we're going to be talking about a key controversy or disagreement about the economic data in the market, right? Kind of like what you're doing today, Kevin, right? You're not here every day, but you want to be in here today because you want to know, I want to know what Seth thinks about the CPI because he trades bonds. And the CPI is like a really big data point, right? So that in and of itself is kind of like, there's kind of a certain cap on viewers in the live stream from that respect. Now, there's no cap on it in terms of the community side, like if you guys enjoy being here. But I think that that's something that I have to work on a little bit more. I'm not quite sure what it is that I need to do on that next, but I'm not as entertaining as like Dr. Disrespect, for instance, right? So a lot of what we do here is really boring. So you shouldn't expect to see that many people trading, watching treasuries. I think another thing is that our own performance, I don't know. When I've done really bad, I tend to get more interest. But lately, my trading hasn't been great. It's been like I have like really good periods, and then like 1 or 2 days, and I just blow it all. I think that my returns are more fat-tailed than I'd like. I'm not quite sure how to adjust this, but I think that one of the big things is that I do need to be more cautious around high volatility, like I am being here this morning. And so there's that, right? But another impact, and this is a really quite a significant factor as well, is that YouTube does not really recommend live streams very much, and it seems like they're doing it even less. I did change my thumbnail, and for a while it seemed like the thumbnail was working a little bit better, but I'm starting to think that maybe the thumbnail is not as good. Maybe we should change the thumbnail. What do you think? Should we go back to the old thumbnail? What do you guys think about the thumbnail? So there's all of those sorts of things, but really the reality is that we don't get a whole lot of viewership from Discovery anymore, and that's just the nature of it. That's why I've gone through here a couple of times, because I don't, like I'm telling you, like I'm not making millions of dollars from trading here, right? I'm trading micro contracts, and I don't always do well with it, and this market in particular has been really frustrating to me. We were doing really great when it was kind of like the normal market. Well, not the normal, but the market between August and December, our treasury trading was doing really great. And we were mostly concerned about, like, there were periods where I had a good trade and I really could have pushed it, and it didn't, right? Since then, it's just been rough and tumble. But, I can do this forever. This is just micro contracts. It's fine. We can do it forever. But that's the sort of thing that attracts people, or at least attracted people, was you put a big number and you say, we're going to make $1,000. I'm going to show you how to do it. And yada, not interested in doing that. I'm not interested in doing that. I want people to be interested in the information that we have to share. I want people that are interested in the true nature of markets and informational inefficiency and the consequences that has for the rest of society, because I think that they're really significant, and I don't think that society realizes it. And I think that we often make negative, or not negative, but bad choices based on this larger belief we have in society that markets are informationally efficient when they really aren't, right? And people that enjoy us, right? Which, is always going to be a small group of people. I think that's just, I don't want to come in and be like, you're just saying that, Seth, and then you're reinforcing a false belief or whatever, and then you're going to act like that, and you're not going to be able to attract that positivity. And you're like, but I've been through this enough time. I'm self-aware enough to know that I'm not everybody's cup of tea, right? We have a very, very low agreeableness trait, very logical, and it doesn't, not everybody likes that. And in fact, when I participate on Reddit and other forums, I'm very, very frequently am making people mad because they don't want to hear what I have to say. Right? So that's cool. But we still tend to hover between 16 and 24 viewers a day, which is remarkable, and it just shows that it is same group of guys coming in and out. Another thing, the last factor is just that the further the market goes down, the less people you generally see researching about trading, right? Not seeing the chart is also kind of a bummer. Like, most of your screen are DOMs and we can't see your entry on charts because of Jigsaw. Yeah, well, that's a hard one for me. Do I still have it up? I don't think I closed it. Yep, I didn't close it. I have there's a chart of the ES. There's a chart of the ES. And I could put a chart of the 10-year, and then you could see my entry and exit. That's true. That you're right. It might help. It might help. The thing though is I don't really want people tracking my positions. You know, especially in micros, you could move it. Yeah, you could. You know? And to be honest with you, um part of me is kind of like I would like to go to where the stream has no idea what kind of trades I'm making, and people are not coming to see me trade, they're just coming to talk about the market. That's another thing. I mean, I've been trying to kind of go that way with TikTok. Is in TikTok, I mean, I will talk about trading from time to time, but I don't focus on that as much anymore. Nowadays it's really more about, hey, understanding the market and what the market is doing right now, and having fun and it being funny, right? Because markets aren't informationally efficient. If markets aren't informationally efficient, then that means that the market's gonna do funny things. and and we should say, we should enjoy it for all it's worth, YOLO traders attract a lot of viewers. Yeah, it really is the case. Well, like FTH, the thing that I've found on YouTube in particular is that your thumbnail is critically important. Your thumbnail has such a huge impact on who clicks on your video and finds you. And if you put a big number on your thumbnail, people click it. People click the thumbnail if there's a big number on it. And if I had done that from the very beginning, if the whole 5 years I was just putting numbers on it, even if it was just sim and I said sim plus 10,000 or whatever the deal is, right? Probably would have a lot more viewers, right? And then there's, and then you can kind of transition into these other things that really bring big viewers, like collaborations or things like that. But I think that it's very unwise to post that stuff. The FTC is very much so. Here's the thing. One of the big ones that drives me crazy is user testimonials. So if you are on a trading promotional website and they're using user testimonies, I would be very, very cautious. Because generally speaking, the people that know what they're doing, will not use user testimonials. Because if a user, if in a testimonial they make a performance claim, then that's basically the same as if you made the claim. And you're basically claiming that this is the typical performance that my customers have, right? And if the majority of your customers are losing money, which it's always going to be the case in trading, no matter what, even if your system is just like the absolute holy grail, there's still going to be the majority of people are going to lose. So, because that's just the way that the market works. So, right, it's just a liability. And I think it's the same thing. I think that coming out and like regularly posting numbers is in the long run is a liability, and that it's better for us to build our audience based on the quality of our content, right? So the VODs are like what really grows the channel. And I have to say, like, the channel really is amazing. It does so much better than I had ever dreamed of. And I think that there's a lot of work that I need to do on my end. I wish I could hire people, because if I could hire editors and writers and stuff, to pump content out more frequently, I think that we could really push the channel to like a new level, a new tier. But we're kind of like on the edge of a new tier anyways. Like we're getting close to, aren't we getting close to 8,000 subscribers? I forget if it's, I think we're like at 7,500 right now. Let me see here. Just go to YouTube. Mm-hmm. 7677. So that's really crazy. And I don't generate enough. Here's the issue like that I have with the channel is that I do want to make money from the channel. The reason I want to make money from the channel is so that I can hire people, because I really want to have a business where I have employees, and we're all working on making better content for you. And like if I could hire writers and editors, that would be like, man, we could do such cool stuff with the channel, right? We're kind of like just there on the edge of where, like, once you start to get into 10,000 viewers, that's where all it takes is one video to just kind of catch on in the algorithm by chance, and your channel can take off, and then we would be there and we'd be able to do those sorts of things, right? So right now, the channel actually does make revenue. Like we can do all of the things that we want to do with equipment. Like you got a great camera now. I don't think I've got one thing coming in the mail so that I can move the camera from that stand over to that stand more easily and everything, because that's really annoying to me. But then after that, I don't know, we could put some more lights in there and things like that. But I think that I'm just going to save it so that at some point in the future we can spend it on, like, we have a really good video, we hire an editor for that one video, something like that, right? If streaming is not fetching you much, why bother? Well, so yeah, that was kind of where we're getting to the next point, though, was that, like, the channel is amazing. I don't know if we have to stream. Like, obviously, the channel metrics would probably suffer if we stopped streaming, but I don't know if it would be huge because we still get, the majority of like the beneficial traffic comes from people coming to the VODs. But I really enjoy doing it, and I really enjoy being around you guys. And you guys don't always come into Discord. If y'all was in Discord all day long, then maybe I'd be like, yeah, we just chat on Discord and I won't stream anymore. And I am considering taking a break. I think that kind of started when I was frustrated at certain points. I don't want it to be like, oh, so that's quitting sort of a thing, because it's never going to be that. But it is going to be like, I need to spend the time that I'm streaming on other things, right? Like I could be spending these 2 hours reading and writing videos and programming up machine learning strategies, finishing studying for the Series 67 and a Series 3. Like there's like, I have a list. I don't know if you can see it on my chalkboard. No, you can't really see it, but I have a list behind me of the things that I'm working on right now. And I could be using the morning live stream time for that. Well, we got our first like serious turn. The S&P 500, it appears to be recovering here on the open. I might already be too late, but let's just say I think that today I'm still in the mode of, I don't want to take on risk, but let's just make note of 3.04. Glad that you found a channel. Only a trading related channel besides Fat Cat that is really giving away good information. So tell me, what is it that you guys like about Fat Cat? Because I've gone to the channel before and I've kind of seen like what's on there, but I didn't like really dive deep into it. But every time I've gone in there, I just kind of like, oh, okay, that's interesting, because like the channel wasn't active anymore. Yeah, I'm pretty sure that I don't know if we'll break 10K this year, but I think we will definitely do it next year. So you're not very, but you are, well, you have been the past few weeks, D. You've been very regular. Man, is the 0.4 like it's starting to look like a really good trade? Like I'm starting to think, man, 3.045 wouldn't be bad. 3.05 wouldn't be bad. I don't know. I don't think I'm in the mode. I don't think that I really want to get, like, if I think that if I came in here and I took a trade and I lost $10 on it, that I would like be really bothered by it. And this is not the kind of situation where I can guarantee that I'm not going to have 10 ticks against me, you know? It's too volatile. I think I want to wait for more favorable action tomorrow, or, well, and I think I actually might be a little hands off tomorrow and Friday too, but maybe next week. But yeah, and so here's the next thing. Tell me what you guys think, because what kind of content we make, you know, you guys that are already watching the channel regularly, I'm going to pay attention to what kind of content you want the most, right? But I'm going to make a video about, I'm going to remake the getting started in futures trading video. I'm going to make one that's like purely for beginners, and it's going to be like, here's how you enter a position and manage it, and basically the whole shtick about that the market is not informationally efficient, right? So kind of a guide that will get the beginners off on the right foot. And I found this platform. I don't know. I'm still looking at it and everything, but I found this platform that is like a web-based platform. And because one of the problems I've had is like, okay, you got to install NinjaTrader, you got to set up your connection details, you got to do X, Y, and Z, and then pull up the DOM, and then you can take a trade, right? And that's a lot. That just seems like a lot. And I'm trying to get people to be like, okay, you're kind of like mildly interested in futures. I'd be willing to put $500 at risk and trade micro treasuries and make or lose $10 a day. That's the kind of person that I'm kind of targeting with this, or is like the ideal customer. And you know, having a really easy to get into platform, I think makes a big difference. And so I'm kind of excited about that. Simplifying things for people, right? And that's kind of like my bigger thing is that I would like to start going after a broader audience. I would like to start expanding from just talking about futures to talking about trading in general. And I would like to move from just talking about trading to financial markets in general, kind of more like a Graham Stephan, right? But there's still some videos kind of on our side. Well, I guess these are kind of expansion. So I think the next one after that is going to be gamma, talking about gamma hedging. Okay. How gamma hedging broke the market. So that one, I think that one's like a really complicated topic, but it is more broad audience. So that's good. I also want to make a video about the bond market. That one would be kind of more of a beginner. I don't think that very many people will be interested in bonds, but it would be kind of a beginner video. So I don't know if that makes it a broader audience or not. And then I think I'm going to get into some videos that are more like, okay, how much money do you need to trade? I think that would be something that would kind of attract a broad audience. Is the Fed breaking the market? I don't think so. In fact, seeing the treasuries holding a bid above 16.5 is I think a really positive sign, and kind of in line with what I was saying here earlier about that. Yes, it was a higher than expected number, and the market is going to react to that number regardless of what the actual details are. And market is likely to overreact. But because the economic number is not actually that bad and it is only just the higher end of the estimates, you could see some flow the other way, and you might even see a situation where the S&P 500 is just so short that they can't really go any further, and you get like short covering rallies. And we'll have to see. So far, though, in ES, I think that it looks like our scenario is playing out, right? Like they haven't touched the low from before the session, for instance. So that's kind of a positive. I think that they may still make it a push for it. It's only been 10 minutes, right? So they might make a push for it, but then maybe we'll see short covering. And seeing the treasuries bid up here like this is kind of like, okay. Like, look, we're only 25 ticks. We're only 2 basis points away from 3%, which is where we started. So, like, the bond sold off big, but then they're actually kind of saying, oh, this doesn't actually move the Fed. I don't think it does. I don't think the Fed's going to do 75 basis point hikes. So, 0, you only need emails for demo. Yeah, this platform, I mean, you'll see it when I make the video, but this platform that I've been looking at, you to get a demo, you just put in your email and then they send you the credentials and you sign in with it. And so you can be up and going and trading in less than a minute. Right. And I think that's huge. And it works on your phone, which is also huge. So I'm kind of excited about it, even though it's not, because I mean, look, I love the complicated stuff, So it's kind of like, oh, well, if you're a beginner, try this one, but this is what I use. Sure. But, what I'm doing is like way more complicated than most people are ever going to want to do anyways. Some people just maybe want to put $10 on what the interest rate is going to do, or on inflation, for instance. Would have been a good example is that you could have come into the micro treasuries at the beginning of the year and sold the you could have just gone straight short, or you could have just gone straight long yields with micro treasuries, and just one contract would have been like $2,000, right? And for like a $10,000 portfolio sort of a thing, that is what the average person is going to have. That would have been an effective hedge on their portfolio. That would have been a hedge of 20% on their portfolio, right? So I see an opportunity here to get more people interested in futures trading, because since the CME has made this change in micros, like it just makes like everything so much more accessible. It's crazy. And what's happening was, like, we had the micros, now the platforms are starting to catch up, and the platforms are doing some cool things, I think. Of course, part of it is that all of the brokers are kind of moving to a paradigm where they own an app. Usually the app is kind of considered a separate entity. So they're kind of, because that's where they can actually innovate to try and attract customers, right? So, well, so there you go. I said, hey, I would like to go long 04. And I said, no, this is a bad idea. And look, I would have been dead wrong, and I would have been very unhappy with myself. Anyways, but you guys tell me, there's kind of videos that you want to make. So I told you I want to make one about gamma hedging, and I want to make one about bond market basics. And why is my voice cracking? And I want to make one. I have a couple of other videos that are like, how much money do you need to trade? These sorts of things that people are always searching for, right? Videos about current market happenings. Maybe at some point we set things up so that, like, I have a desk here behind me and we can set up like a news desk sort of a thing to make videos on. Yes, I want to see it make it place. We will make all of those. Those ones that I talked about, we're definitely making. Yeah, I mentioned Luna, and today it's $1. Is it back at $1 right now? Yesterday was at 0.64. It looks like so man, like, here's the thing. They lost the peg. They used all of their reserves to try and hold the peg, and they, like, literally, the exchanges shut down and prevented people from pulling their money out. So it's like a Ponzi scheme with an off button where you can't withdraw things. So is that something where you want to put your money in? Yeah, I don't think so. I don't think so. So even though the peg is probably back, I'm not so hopeful about the longer term future here. Okay, so the oil is pushing, did move higher. We kind of had pointed out there that oil was turning around. They've since moved much higher. They're now at 105. This is $2 higher. Man, oil's so volatile now. I'm glad I'm not an oil trader. Man, I'd be ruined. Uh, bonds are recovering significantly. S&P 500 is rallying. At the moment, the S&P 500 is really starting to look like they're going to try and retrace the whole move, which is kind of like what we've been warning about. Obviously didn't have confidence enough in that sort of a thing to have taken like a reversal trade on it. In fact, I was sitting there the whole time being like, no, reversal trade would be like really stupid. But it did completely reverse. I'm quite pleasantly surprised, I suppose. Pleasantly surprised. One video, I made that video about Daniel Inskeep's algorithmic trading video. Hope he sees it. I don't know if he's seen it. I thought that just putting his name in the video would be enough, but I don't think. Actually, let's come in here to video analytics. Is it giving me traffic from people watching other videos? Nope. Well, other trading videos, but algorithmic trading, no. It doesn't rank high enough for Daniel Inskeep yet. Well, I think that we should tweet it at him. What do you think? Let's go tweet it at him. So I'm not getting, wow, it was a lot of likes on the video though. A lot of likes on the video. Oh, hey, I can clip now. That's cool. So wait, can we do clips on this on the stream? Oh, we can. We can. So hey guys, I don't know when this got pushed out to us, but if you look underneath of the video, you can clip things now. You can like make a clip of the stream that will show just like a certain portion of the stream so that you can like share it around. So give that a try. I wish Win was here because she would love that. Ah, that's just for Win. But I think that we haven't seen her because her laptop. Maybe we need to buy her a new laptop. Okay, anyways, what was I? Oh yeah, I was gonna tweet at Daniel Inskeep. Okay. There we go. Like, mm, 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 mm. I'll tweet that at him, and hopefully he will see the mention. Forex Live says, "Wait, is this the thing? When did everybody start saying degrossing instead of deleveraging?" I thought that degrossing is actually slightly different. Could be wrong. Dude, are we? Look, we are below. We are below 3. We are below 3, and in fact, on the 10-year, the yield has actually dropped more. The yield has actually dropped more in the 10-year because the 30-year came up so hard. This is so crazy, guys. I just can't even like. Well, at this point, I think that we should also put on the table now a situation where it comes all the way back, and then the yields actually in the end increase more, because when I thought that it could come back, I didn't think that would be before 10 o'clock. Before 10 o'clock Eastern time. What? How is that actually? Okay. Okay. Whatever. It's a little crazy, right? It's a little crazy. I think you could help the CFTC catch spoofers. I would love to do that. I would. I would totally sit here with my Dom every day, and then when my little things kind of give me those little like ding ding dings, and then I see a large order place on there, and it's placed and canceled, and then I would go to the exchange. I would have to have like access at the CME, right? Go in and see who placed those trades and start investigating. I would love to do that. I would love to do that. Okay, well, after they got below 3%, we saw a little bit more extreme of a pushback down. So we could try going long at 3%. But again, since for me, from a fundamental perspective, because I don't think that we're really moving the needle here, like a 3% interest rate is probably appropriate. Okay, Luna nosedives under $2, loses 98% of its value as Terra USD struggles to regain its dollar peg. Yeah, see, like I can see kind of like the trade, but like I don't think that we actually have enough of a clear enough indication that the order flows can go a certain way to take a trade like that. Like the cumulative delta for all of the treasuries here since the move has been long. It is very possible that all of this has just been unwinding of the news move. There's a lot of spoofing in UB. Well, I'm personally only interested in like really, really clear spoofs. Like in this situation right now, there's 2,000 contracts at 22. If I was at the CFTC, I don't think that I would be pursuing those. You know what I mean? But like when somebody puts 8K and immediately cancels it, that shouldn't be happening. That shouldn't be happening. I think that you go and you look at who's doing that. There's nothing of value behind UST, and Luna Infinite amounts can be created out of thin air. Bitcoin, Ethereum, and Monero are all scarce. We choose specific. Yeah. Well, I don't know. I'm not sure how much spoofing actually harms the market or not. I don't know. I guess the thing is that when I was a beginner, I was really concerned about spoofing too. And, I think I fell victim to spoofing many times and lost money from it. And so maybe I'm not as interested in it now just because it's not very common and I haven't lost money from it. But I feel like that when we talk about things that we could do for the market, that's probably, spoofing is probably pretty low on the list, right? It'll get me really agitated when it happens, but I don't know. I'm still like I think that the biggest thing that I see in the market right now, like the one thing that I would change is I think they need to change the mark to market rules. I don't think that um you should be given leverage based on the current market price of all your assets when it's like you have a huge position. I think that should have a calculation based on the impact that you're going to have if you had to sell it all. And that's going to reduce the amount of leverage that these guys get in some of these instances. But you know what? That's fine. You don't need that leverage to do it. And I think that would reduce a lot of the volatility that we've seen since COVID. I think that's the biggest thing we can do to help, right? And then bigger picture, the really big thing that we do to help is that we to teach people that markets are not informationally efficient. The efficient market hypothesis is wrong, right? Yeah, interesting. So Futures Trader 71 did have a scenario where they got to 40-40 in ES, huh? I'm kind of interested to see if they start doing funky stuff around 40-50 again, because I think that's a gamma level. Okay, well, there was like a little bit of wrangling things around, but the 10-year is above 3%, largely because of how far back the 30-year came. Man, so Bitcoin is trying real hard to push back up here. I don't know. Maybe that's just the way that chart looks because I have it on a more consolidated chart. When you look at Bitcoin, it's like yeah, they're trying real hard to hold that 30,000, but it's actually still just in line with the S&P 500. I think they need to show if someone is short, for example, on the DOM. Well, I so here's the thing is that there is some really granular data that could be provided for sure, but I have a hard time thinking how would you even like display that, you know? Because we could have all this information about every order in the queue, but you can't show all that stuff in the DOM, right? So I think that if we were going to go down that route, probably the best thing that they could do is show live open interest. Yeah. If they showed live open interest on the instrument, I think that would be incredibly useful for because I've seen there is an exchange the Shanghai Metals Exchange apparently does have it's not live, but it's like 5-minute open interest data. And I've seen some trading strategies utilizing that appear to have efficacy. So live open interest would be really interesting. Yeah. What's this? Rumors of Celsius being completely wiped out. Dragonfly Capital at a 9-figure losses. If you have funds at Celsius, would take them out. Ooh. That's being tweeted by Bitfinex. Yeah, long at 3%. I pointed the trade out. Didn't take it. That was not bad. Although right here is kind of like a key spot now for the treasuries. It's like seller's cost basis here. So I don't know. This next set of turns here in the treasuries could be the ones that really define the longer term trend. Let's see. I think it's a national secret in futures not displaying the shorts. I think it would be really useful to know that, okay, that move, the open interest decreased, that means that was people puking, you know? I think that would be useful information. Especially because I think that for the kind of trading that we do, that the most useful piece of information that we could have is if there is any kind of pattern in where people tend to stop out. I suspect that there actually isn't, that the stops are actually fairly uniform. But you can see that with MBO data. I'm bothered to put it up there. That's another one of those things that, like, when the channel takes off, and we're making millions of dollars, we're going to pay a video editor, and we're going to pay for MBO data, and we're going to do research on MBO data. That's what we're going to do. And we'll write a research study. That'd be cool. How high did it get? Was it like 20? Oh, above 28. Man, that's actually like a really far move. Man. But like, here's the thing: is I pointed out one that would have been bad, right? And I pointed out one that would have been good. Like, there's on one hand, I'm like feeling a lot of FOMO right now, but then I'm also saying, no, see, Seth, this is exactly like, even though there's the money making potential in here, the volatility is too high. I don't want to have to take $50 of risk to make a trade. I'd rather not. Are you on that? Well, so I have a sim long on ZN that I put on after, I don't remember anymore. Was it after? Oh no, it was after the Federal Reserve. Yeah. I put on after the Federal Reserve and it went long, and I was using 10 contracts, I think. I took half of it off on like the quick move that day, and then kind of let the rest of it ride. Took 4 off at 119, I think it was. And then I've just been, I reduced my risk. I've just kind of been sitting on it because, like, if I had really thought that this CPI was like really bad and like interest rates are just going to skyrocket here, then I would have taken it off, right? But with the way that it is right now, I think that I want to have one contract on, and when I feel confident about something, I might try and market make out a few ticks with it too. Do you not try Z? No, I don't. Like, here's the thing. Well, again, I've said this a trillion times, but the more volume and liquidity that there is in an instrument, the more predictive signals you can find, generally speaking. So there's a reason I want to do it in the 10-year. not the 30. You know, like if I really want to, if I need to make more money per tick, then I'm just going to trade 2 contracts in the 10-year. Right? But I trade the 10-year because the edges are more amenable to ZN than they are CB. Kind of interested in this Celsius thing because if they have a 9-figure loss, that's I wonder what kind of contagion effects could be lurking under the surface of the cryptocurrency world. Okay, so I'm wondering here, do we still get... I'm going to come in into Financial Juice and refresh here. Yeah, it was Fed's Bostic speaks at 10 Eastern time. I guess Biden's going to be speaking today, tentative. I'm just trying to figure out if we've got anything coming here in the next hour. It's like, today has been such a long day, dude. Can you believe it's only 8:06? What? The first 30 minutes of the open in the ES was I must be really into the abstract thinking. That might actually mean that I might be able to make better trades than I think, because when you get in that mode and you lose track of time, that's kind of when you're more in the right brain mode, where you might be able to see kind of some of the patterns and stuff. Yeah, I don't see anything. Forbes magazine tweets, Supreme Court majority reportedly still supports overturning Roe v. Wade. I think so. I'm wondering, you know what, on that one, this is something that I'm seeing in media more and more. So you guys got to be aware of it, okay? I'm seeing a lot of speculation being reported as rumor when it's actually speculation. You get what I mean? So like you come in and you say, it was maybe Citadel was the one that shorted Terra. Okay. They don't have any source, or, it's not like somebody calling, it's just somebody's speculating. It's wild speculation. But then other people pick it up as truth, and they start to treat it as though it is a rumor, that there is some source that says that that's happening, but they're not willing to be public or go to a real institution about it. But, that it's the rumor. When it's not a rumor, it was just somebody's wild speculation. And I'm seeing that a lot, even in traditional media that's supposed to be like really, responsible with this sort of stuff. So, and they're doing it, the left is doing it a lot with the Supreme Court in particular. So the speculation that I saw was, it wasn't the leftist clerk that put it out. It was a right-wing clerk that put it out, because the right-wing clerk thought that if they put it out, that it would prevent any of the justices from shifting their opinion, right? So it's not like a crazy speculation, but it is a speculation, right? But we don't have any piece of evidence to suggest that that's actually the case. We don't know anything about who the leaker was. So we can't say anything other than that leaking in this case is very unprecedented, and that if they find out who it is, that guy's career is probably over, at least in terms of being a clerk, right? These sorts of things. So I haven't seen a case like this with companies and economic reports and stuff that's relevant to our trading yet, but I think we will. and it's something that we're gonna have to keep an eye on, and it's kind of a hard thing to deal with, but because it's nice to be able to come in and say, okay, well, I have a piece of information that's like really, it's like a really tiny piece of information, but maybe that's enough. Was something going on here? Okay, I'm not hearing anything on the Squawk or seeing anything on Twitter, but for some reason the S&P 500 just like dropped really hard there, and the treasuries did flip back down. So we'll see if they're going to go for higher rates or not. I'm wondering if the E-mini is reacting this way merely because of the treasuries, or if it's just part of the move. But it looks like they're going to test the support at 4,000 again. But anyways, it's nice to have like a piece of information that's like really, you don't have a high confidence in it, but then in the end it ends up being right, right? Like we want to find those. Those are where you can gain edges, because those are going to be things that not everybody knows. But when there's so much disinformation out there and so forth, we really have to take the position of there needs to be hard evidence in there of some sort. Like if a news story cites a source, even if they don't cite the source's name, they say source is familiar with the matter or whatever the deal is, then that's one thing. But what they're doing now is they're starting to report just speculation. And the way that the news story treats it is that it's fact. I don't think that everybody that reads it realizes that it's actually speculation. So we got to be really careful about that. U.S. President Biden, confident Fed will do its job on inflation. Inflation is still unacceptably high. That's why the market moved. That's why the market dipped. So I don't think that that's actually something. So robots are reacting to it, but I don't think that that makes a difference in terms of people's expectations. Changing expectations about future fundamentals or order flows. I don't think that headline, that any human reading that actually makes that determination, but like some robots might have been trying to trade that. Right. So that's why the market moved there. Where was the one where they were saying that's why they moved? Oh yeah, it was print trading here. Bloomberg. I have watched that Bloomberg video before. D here has shown me a bunch of different videos. That Axia video, I've seen the thumbnail for it before, but I don't think I've ever watched it. When I short on the DOM, does that short show up on the bid side on my order flow charts? So it depends on whether it was a market order or a limit order, right? So when I short on the DOM, so if you put an offer out and you got filled, then the numbers are actually going to show, all of these indicators are showing the market orders, right? So they're going to count the market order as a buy against you, not as a short, right? But if you go short with the market order, then that will show it. Your number will be on the ones that went short there at the bid, right? So I always had a hard time sorting that out, but once I understood a little bit more about how these guys execute things, I kind of think it made a little bit more sense. But informed traders prefer to use market orders. So And limit orders we think of as just the market makers, generally speaking, unless there is like a really outsized absorption in an area over an extended period of time, right? So, can you please explain more? Okay, so like if we're showing cumulative delta, right? If I put an offer at 17, right, and I get filled, then the order that was associated with my fill was a market buy order, so it will count as positive towards the cumulative delta at that point. Again, it doesn't matter. What matters, D, is whether you used a market order or a limit order, right? Like just here on the DOM, when you watch on the DOM, if I had a limit order offer here, right? The order that hit me was a market order buy at that price. So that one represents the market order that hit me, right? This is where I think that a lot of these footprint charts and people looking for like these imbalances in the footprint charts is like really an oversimplification of what happens, right? But then I use an oversimplification to kind of show what it tends to do that works better, right? What it tends to do, market tends to follow the market orders, and the limit orders will cancel based on what the market orders are doing, essentially to get out of the way because of the probability of informed trading, right? So that's why watching cumulative delta is so great. And if there's an area of absorption, which is less common, right? These passive players, these limit orders tend to be market makers and hedgers and et cetera, right? So it only kind of matters if there's like a really big imbalance, like there's a really big iceberg. But even if there's a really big iceberg, then we have to go into the icebergs and large orders video to go through all of the things about what about that context might tell us something about why that order is there. So, for instance, today we saw these large orders offer. Well, there's a 10-year treasury auction. So that might explain why those showed up, right? Otherwise you're probably just looking at noise. You're trying to read something into noise. But an order flow charts is just market orders. I understand. When opening a short, is the trade showing up on the bid side in order flow? No. It depends on whether it's a market order or a limit order. If you do both of those things with market orders, then your order will show up as negative to the delta when you sell it, and it will show as positive to the delta when you buy it, if you're using market orders. So 15.5 appears to be like a little bit of a liquidity hole sort of a thing. Like, I don't know, they've been hovering there. I haven't seen too many prices that like really showed me like clear signs of like when it gets really fast, it's kind of hard to find where the liquidity holes are. But there is a VWAP there at 15.5 and it's a low volume node, which is kind of interesting. And then price has been stuck there for a little bit. So there might be a liquidity hole here at like 118, 16, 15.5, something like that. Atlanta Fed business inflation expectations relatively unchanged at 3.7. Forbes tweets stocks rebound after inflation moderates slightly, giving investors hope that prices may have peaked. Wow. Of the 95 CPI components we can track back to 1998, 63% of them show year-over-year price gains of 6% or more in April, which is the highest share on record. Yep, we have a 10-year auction today. I'd be interested in what Mohammed El-Elran was saying on CNBC. So let's see, are any of these other ones doing anything interesting? So the metals have recovered, and of course, oil went higher. The Japanese yen did not completely recover the move as much as the 30-year did. And Bitcoin, I'm not sure. It looks like it's following the E-mini for the most part, but there it may be over exaggerating the S&P 500 moves in some fashion. He's all doom and gloom. LRAin is a hawk, like in the end, is what it is. That's one where like I like. Here's the thing: I really like the guy, like because I think that he shares a lot of my philosophical view of the market in terms of that, taking on excessively high debt and thinking around with interest rates and all these things like this have negative consequences that are really bad. But I think that the difference is that I've seen where his opinion on those things really negatively impacted his management of PIMCO, right? So, like, he makes a great person to be on television, but I wouldn't necessarily want to trade with him. Well, I guess I would want to trade with him because surely he makes money from doing it, and he has made money from doing it. But it's just that one thing I always have to remind myself that he made some big calls during the quantitative easing era that were dead wrong and caused his fund to underperform, and that's why he no longer works there. That's what he basically got ousted, right? So yeah, he is all doom and gloom. He tends to be, and you kind of have to factor that into what he says. This is the same thing with Jim Cramer, man. Like Jim Cramer is really smart. Everybody makes fun of him, like he's a terrible. You just do the opposite of what Cramer says and things like that. Well, he's going to be wrong at key points, but he has insight into the markets that is really really effective. It's it's just that you got to remember that Jim Cramer's bias is what he feels at the moment. He's kind of impulsive, and he'll say things about the current market that like his whole doom speech before the 2008 crisis. Like we all look at that as, you see, he was right. He warned us, right? But the reality is that in that clip, he was being impulsive, right? And he'll do that all the time. So he'll make that comment like that is kind of like spur of the moment call, and then it ends up being dead wrong and he looks stupid, right? Yeah, he had to leave his previous job because he made those big calls. Yeah. I mean, it wasn't that bad, but PIMCO underperformed because they thought that that quantitative easing was going to be really bad for the market. And he was like the most vocal voice on that was basically wrong about what I consider to be the biggest trade of all time. If you go long when they started quantitative easing, you made bank. you made bank. That was the longest, the furthest bull market in history. He was wrong. I mean, it doesn't mean that everything that he says is nonsense. I don't know. It's this whole thing with the statistics again. It's like, man, where's my pen? I'm just opened it up over here. I don't think that I actually closed it. Right? If you got a distribution that's like this, right? Right? I think that's like zero line. I think that what you get with Jim Cramer is you actually have something that's kind of skewed like this. But he's had a couple of calls, especially lately, that were like really, really bad. So how do you sort out whether you should listen to him on any one individual thing? Well, you're just gonna have to listen to their logic on that particular thing. What they're really better for is to call out certain pieces of information that they're using to make their decisions, and then you can use your own frameworks for things to decide what to do. And we as retail traders, we're only interested in what is going to predict orders today. So what they're saying is maybe just context for the broader market. So we don't have to like follow those guys, but that's how they end up being really useful. And especially with Jim Cramer, the reason Jim Cramer is interesting or useful is because he teaches you how a hedge fund thinks, right? That's because what he does when he comes in, that's what the hedge fund is doing, is they're saying, well, here's what happened today, and here's how we're going to react to it, right? Tells you how the hedge fund thinks. Same with the fast money guys. These are how the institutional traders think. It's useful information. Eventually, you get to the point where you'd be able to sort it out for yourself, and you basically know what they're going to say. And that's kind of what I'm trying to help you guys do too, is I'm kind of giving you both sides here, right? Like with this inflation is great. I think we did a good job on inflation, even though I didn't take any trades on it, right? That, well, it was the higher end of the estimates, but it didn't actually exceed the estimates. And it's still showing that peak inflation may be behind us. And it's probably not enough to move the Federal Reserve to 0.75 basis point hikes. And since there was already so much negativity in hedging coming into this, you're getting this thing where like the whole move gets retraced. Yeah. Right. And we're able to make that call because we understand enough about how these large institutions and stuff kind of play these sorts of things to know. I hope some of you remember who warned you and who lied to you. Yeah. Bennett Tomlin talking about these cryptocurrency schemes blowing up right now, like Terra and Celsius supposedly too. Boeing exec says no need to tap credit lines or take on more debt or issue equity. We need to hit delivery milestones. I wonder at what point you can buy Boeing. Seems to me like that's a big important company that it doesn't look very good right now, but will probably still be around in 50 years. And at some point during that 50 years, we'll have a good period. But how do you time that? Doesn't seem like the current company is doing very well. Now there's the S&P 500. They tested 4,000 and bounced off of it and made a higher high. Do you think that they could beat the overnight low? Or the overnight high? While it is heartening to see that annual inflation moderated in April, the fact remains that inflation is unacceptably high, and bringing it down is my top economic priority. Yes, you're doing so much to help Mr. Biden. My plan will lower costs. Meanwhile, congressional Republicans' only plan is to raise taxes on families. That is not accurate at all. Okay. Republicans see little political danger in abortion showdown. Says the Hill. I'm going to have to read that one. Do you want to read that right now? Is he going to believe it's still only 8:30? Today is the longest day. It's the longest day ever. Longest trading day ever. You know what it is? Yesterday I was working on this issue, man, and I was working with a coworker, and we were just deep into it, and it was just this issue was defying us like at every turn. Like we would fix something and then there was something underneath of that, and like every little setting that you could have was set up wrong. Okay, so there's the oil inventories. It looks like they're selling on the initial move. Okay, the GOP is shrugging off a showdown over codifying the right to an abortion, taking the gamble that they won't pay a political price in November. Schumer is poised to force a vote Wednesday on a bill supported only by Democrats in the wake of a leaked Supreme Court draft opinion penned by conservative Justice Samuel Alito that supports striking down Roe v. Wade. Yes. I should note, by the way, that Collins and Murkowski, who are kind of like the pro-choice Republicans that would tend to vote with the Democrats and could make this this vote pass, are voting against it because they say that it's too extreme. And they have a bill that they wrote that if Schumer brought it up would probably pass the Senate and would I think that it would. My understanding is that it would make first trimester abortions legal, essentially, right? But they're not going to put that one up. So the Democrats are like trying to force it into being an issue in the election. Okay. But Republicans say they see little political danger in voting against the bill and believe that voters will care more about inflation, an issue top GOP senators have been leaning into this week on the sidelines of the abortion fight. Okay, well, so I think that there is a lot of risk in that strategy, because if inflation is moderating at the moment, inflation could be a much less of a deal 6 months from now. Now is probably when inflation, like right now is probably when inflation has the most power politically. So if you're watching all of the numbers and everything just based off of it, of course, I think the bigger problem is that the American populace doesn't really like Joe Biden. So I think that Republicans still do really well in November, but it won't be like an absolute bloodbath. I think that this abortion issue gives Democrats enough of a what do we call it, enthusiasm, helps them make up that enthusiasm gap enough that they're going to stem some of those losses. I don't think that inflation is going to be as big of a deal in 6 months as it is right now. I don't think we see it as a hard vote. I don't think Collins or Murkowski see it as a hard vote, Blunt added, referring to Senator Lisa Murkowski and Susan Collins, the caucus's two Republicans who support abortion rights. It's so weird to me to hear it referred to as abortion rights. Okay. Senator Rick Scott, the chairman of the National Republican Senatorial Committee, also brushed off the potential for political danger. No, I mean, think about it. They're going to have late-term abortion on demand. It's not where the country is, Scott said. Yeah, if you can actually change the conversation to being about, not about whether abortion should be allowed at all, but whether late-term abortions should be allowed. Because he's right. On late-term abortion, the American public is not in line with what the Democrat Party does. And I think that Republicans are willing to compromise on that, like, abortion, is legal within like the first 12 to 16 weeks or something like that, which is basically the first trimester. Our members are going to hammer away on inflation, the economy, the border crime. Okay, well, so those other ones, border and crime, those are definitely other issues that might still be important. But I would be very careful with Republicans about betting everything on inflation. Maybe I should make a video about that. I don't know. What's going on here? Looks like Tether is having a little bit of trouble and is losing its peg now today. That's interesting. Shall we come over to Crypto Watch? Pull up a chart. When did Yellen start about abortion, saying it's going to be bad for that? Did Yellen say something about that? I don't recall that. The one that I always see is it's almost like a bad joke now. Is like whatever it is that the Republicans are doing, it'll be bad for minorities. Is what they always say. Tether, here we go. UST. Looks like there was. Okay, I'll pull it over here. Yeah, it looks like there was a move on it, but recovered. Looks like they're pretty heavily. Yeah, interesting. And that was all when Bitcoin was crashing along with other assets because of the inflation numbers. So well, not Dogecoin is down 90% from the Musk Saturday Night Live peak 1 year ago. Checking around things. So earlier we were talking about the numbers on the stream. Now we're to 22, right? So it seems like we're a little bit lighter in the earlier parts of the stream, but we still get up to 24 pretty consistently every day. So that's, I don't know. It's kind of weird. It seems like no matter what you do, it's just you always get 24 viewers. I love it, but I'm glad that people find the stream useful. I really do, though. I don't know how I'm going to do this. Well, I'm going to have at least 1 week where when we have the baby, and I'm going to be, because I remember when I did that, I did a lot of phone reading. So I'm going to be studying hard for that Series 65 exam during that is what I'm going to be doing. And I'm hoping that when I get that one out of the way that we can move in. I've found that I've had, well, I don't know. I've always been like, oh, I'm reading this, but I want to get that over with so that I can read this. Is it just because I like the novelty of it? But at the same time, like when I read this, I learned a lot of things. So, like, for instance, when we read Nassim Taleb's book, like one of the things that I wasn't familiar with that I wish I had known earlier is that least squared deviation is like a really, really poor metric. And in fact, if I come in and I do like some back testing with like Bollinger Bands and I use just mean absolute deviation rather than least squares or whatever, it's a better, it's better essentially. The annual watch price will follow it better. So yeah, Actually, I'll show you here because I have it on this chart, right? Can you see the lighter gray? And like especially here recently, right? You get like one bar outside of it and then it tends to turn. Right? Right here. Right here. Right here. When actually my back tests don't, I think my back tests still have stops and targets and everything. I think that if you were to only buy when it touches here and only sell when it touches here, that it's not very good either. But you can kind of see how if you're using it, like if you want to go long the E-mini, right? If you picked these spots, it would help. If you picked these spots, right? That one maybe even, right? Can kind of help you determine, hey, actually let's come and put it on a 10-year. Or shall we put it on, yeah, can I do 10YR? 10YR. And 1 minute. And it'll be in the lizard indicators is what I like to use. Multi-Bollinger is what we want. Okay, so instead of using standard deviation, we use mean absolute deviation. And the deviation multiplier of 2, I think. Close. Let's see here. Get rid of these plots here. Okay, and then channel fill, is it? I forget what the oh, there we go. Channel flooding. There we go. There we go. Channel fill, and we'll just make it all be relatively background medium gray, maybe. Yeah, close enough. I don't know. It seems to me like the 10-year is a little bit too spotty for that. We could use the 10-year here. I have to change it. It's too light. It's too dark. Uncalculated VWAP standard deviation bands based on order flow gives you over. Yeah. Well, of course. Well, I used to use VWAP like really heavily, but I found problems with that. I found problems with doing that. About dim gray. Dim gray is, yeah. Dim gray is enough. I actually don't like that, but that'd be good enough for us trying to set it up here. Okay. Now I think that here in the treasury, I want a longer moving average. Okay, so instead of a 10-minute, let's try 50 period moving average. Okay. And a deviation multiplier of 1. Nah, it's not good enough. It's 50. Even with 50, it's that jagged. So what if the oh, yeah, the deviation period, yeah, what about 200? That's like really going like long. Oh, geez. 25? Oh, you see that? Yeah, I'm sorry. I'm showing this one. I should turn on this neutral trend here with, I don't know, magenta. Oh, no, that's not what we want. Transparent. Where do the moving average? Show mid-band. Paint bars, channel fill plots. Is it the mid band there and I just can't see? Yes, it is. It's there and I just can't see it. Okay. Well, that's interesting that even at 200 that it's really high. Like, I'm trying to get rid of those jaggies. Neutral threshold of 50. Okay, so let's move over to like a super smoother. Back to like a 50 period super smoother. There you go. That's still not like what I expect it to be. Is there another? No. I feel like I'm missing a property here. Here, I know what I'll do. I come over to this one. EMA multi-Bollinger template. Save. My template. Save. Okay. Indicators. Template. Load. My template. Apply. Okay. Oh, now that's more like what I thought it should be. Deviation type mean absolute mid-band period. Oh, I was missing the mid-band period parameter for some reason. Yeah, so now if I move these to 50. Yeah. And a deviation of maybe 2. That's a little bit better. Right? Because treasuries have a lot of mean reversion in them. So if I'm going to take if I'm going to take a long, I would prefer to do it down in here. And if I'm going to take a short, I would prefer to do it outside of these bands over here. So now let me show you though. Now it's really weird that when I put it on, that I was not seeing the mid-band period property. That's weird. Anyways. Okay, so if I change it back to standard deviation, see how standard deviation is a little bit wider? And it exaggerates these larger moves. So mean absolute deviation is actually better. And then, oh, there's show mid-band. There we go. There we go. How come I couldn't? That's so weird. It's so weird that I had a hard time finding stuff. Now I can come in. I want cyan. Cyan is a lovely color. Don't you think? Where's cyan? Cyan. Cyan, cyan, cyan. There we go. Okay, so now we could come in and we could say, let's use a different kind of midband, right? Like right now, this midband is a little bit too laggy. So we could use a super smoother. Super smoother's a lot better, isn't it? Because it's more reactive to the current trend. There's some other ones. What were some? I think it was. I can't remember which one it is. There were some that just were like really hyper effective. I think they were the volume based ones, but TEMA maybe. These Butterworth filters tend to be better on like long-term charts. Oh yeah, this should have whole HMA right here. There you go. Whole moving averages are really good. There you go. Actually, that one's probably the best. You want to try backtesting it? I don't think I've backtested it with specific parameters. Okay. Let me just come in here to the editor here real quick. We got about 10 minutes. Is this the one? Yeah, here we go. Okay, so if we crossing above and below and yada, 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 yada. So I think that we should do it with the fade one, because then it will do it as soon as it's crossing the upper band and the lower band. Then what do we get? Smooth, base period, deviation multiplier, etc., etc., etc. Okay, so that's all. I think that's all good. By the way, we're using a deviation of 2, right? Why is the car? Hold on. Good grief. Okay. Anyways, so new strategy analyzer. I don't think that this is going to be profitable, but I think it'll probably be better than most. Okay, so we're going to do Bollinger 2 strat. I'm going to say the base period is going to be 50 and the deviation period is going to be 50. We're going to fade it. We're going to use a whole moving average. And, oh man. I don't know what I want to use for stops. That's one of the big problems. Let's just not use targets. Let's see how that goes. So that actually right away is not bad, is it? But it is taking excessive risk on it. right? We're getting a 60% win rate with a ratio average win to loss of 0.5 is not good enough. So if we can turn on the targets, let's just give ourselves like a 16 tick stop target. Now this might make the results more random. Hey, that's not bad. Now that's not right though, because unless it's hitting the other side of the channel more often than not. So 16 is probably too high, huh? No, what it got? Oh wait, sorry, I was looking at the wrong thing. 8. Okay. Yeah, it actually ended up taking more trades because of that. Let's try 8. Interesting. So the problem that it's getting is that it's only coming back like 2 most of the time. Do I get something wrong? No, smooth. Oh, I can take that off. I don't think that makes a difference. See, if the stop was like 4, maybe now we would get equal risk reward. A little closer. The percent profitable is not. It's not enough. It's not enough. Do I have it set up so that it'll show it on the chart? No. Well, I mean, it's kind of doing the thing. Like there, I'm just trying to do it. Yeah. Yeah. It's from Final Fantasy. It's from Final Fantasy. I think 8 ticks is better, but I think that what we just did was we overfitted it. Well, we could increase the deviation multiplier and see what that does. That should give us a lot less trades. No. Well, that helped with our win rate for sure. Well, that's not actually like terrible, but now let's do it over 5 years, shall we? 2017, January 2nd, run. Man, by the way, the 30-year came all the way back up there. The 10-year didn't. The 10-year's still at 24. But it's still pretty good. Yeah, all right. I think the bigger problem that you got here is that when it doesn't work, it doesn't. Nah. Now, if we came in and used targets, let's just say that we did that. We gave ourselves a big stop and target. That might cancel out some of these big, some of the tails, but I don't think that it would be quite enough to deal with what's going on in the center. .87 profit factor. See, I think where one of the big problems is that, like, yeah, this one is with the fixed stop now. Before it was not. So it actually, you can see that it actually brought the profit factor down quite a bit, right? It was 0.92 and now it's 0.87 because all of these really big winners and losers got canceled out. But our largest winning trade and our largest losing trade is better. It's just that the problem with the Bollinger Band sort of a thing is that when it goes through, like it goes through, right? And it goes through it enough that it's a problem. Okay. But as a rule, that like if you know what direction they're going to go, more generally speaking, you could use that as kind of a guide of whether we're too high or too low. You get what I mean? Not too high or too low, but like this is kind of the area, the edge of the range where if you want to get on long on the edge of the range, you can do that, right? But it's probably more effective to watch the DOM and know where they're leaning based on the DOM if you're going to do that. So, but here this morning, it worked pretty okay. Yeah, like the problem is that you'd get something like this where like, okay, say it went short right here, and then like it goes sideways, and then eventually it goes up, right? Like those are the problems too. So now, I don't know. Like the thing that's so weird about it is that there's an infinite number of things that you could try. For instance, it could say, well, okay, so if we've already been in the trade for so long, get out, right? Yeah, we could use filters to say we don't want to take trades when volatility is as a certain measure. This sort of trade would work better when when there's not a lot of trend in the instrument. So if we went to a 50 period R squared, that would probably make it better. That might actually be enough to get you a break even. That's always adding R squared on everything. Everything that I've ever done, I made it a lot better. So, but no, strict trading rules don't really help. I don't know if that indicator really helps you, but I find it useful on the S&P 500. But I don't know. Anyways, I like got really like distracted with all that. That was something that I learned. The mean deviation is better. So, guys, interesting action. They are falling here again. So if you wanted to buy it at 3%, they gave you plenty of opportunities, but whether or not that's the right trade, I don't know. This might be a messy day. It would be interesting if the S&P 500 falls lower to later in the day, but I think that actually probably the worst is over. But we'll give it today, and then tomorrow, Friday, might be interesting days. Hey, maybe a rally is in the future next week. Going into, and then especially after the, what do we call this thing? The expiration. Yeah, that might be a catalyst to move us up a little bit too. So, tomorrow, I'll see you guys tomorrow. In the meantime, stay profitable, friends.